Good morning, listeners, and welcome to the Trade Talk podcast. Undoubtedly, the market is entering a euphoric mode as it is leaving exhaustion gaps while moving upward, and it is happening for the second time for the market, which is increasing the risk of pulling the market backward. Our advice is to trade or invest in selected stocks where the potential is decent from current levels, for example, Infosys, where the fair value is much higher from the current levels, and few metal companies which are trading below their previous highs. On the other hand, buying on index is recommended only on large supports. However, selling on every negative reversal on the short term and intraday chart is highly advisable. It will control the risk of large losses by defining the stop loss exactly. Based on Monday's formation, the Nifty opened higher, however closed at the lowest point of the day, which would invite some short-term weakness in the market, and it is advisable to buy the Nifty between 18,400 and 18,370 levels and keep a stop loss at 18,250 for that. The resistance exists at 18,550, which was yesterday's highest level, and above that the chances of hitting 18,650 would be bright. Today the focus should be on financials, FMCG, select metal companies and tech companies. We are specifically bullish on stocks like ICICI Bank, Axis Bank, Bank of Baroda. We like Hindustan Lever, which is going to report its quarterly number today, and also we are specifically bullish on stocks like Nestle as well as Tata Consumer. From the metal companies, Tata Steel Authority are reversing from their lower levels, but at the same time the focus is more on aluminum companies. So it is better to buy aluminum companies if there is any specific correction during the day. Metals companies are exhibiting completely mixed behavior, and we need to be very specific while taking bets in metal companies. Globally, markets are taking some comfort from robust earnings, but also grappling with the possibility of earlier than expected interest rate hike to quell price pressure. Traders are waiting to see if a slate of Federal Reserve speakers this week will try to calm the jitters stemming from the gradual scaling back of pandemic era policy support. The world is watching interest rates more closely than it has for some time. And rightly so, the moves have been emphatic, especially in the short-term maturities. Global major factors are coming slightly in our favors. The dollar index, which was around 94.25, is now trading at 93.76, and bond yield, which was around 1.5860, is again now started trading somewhere close to 1.5 to 1.53. Crude prices at an unchanged level, and Indian rupee is also at the same levels of 75.35. So broadly, global major factors are slightly in our favor, but still we need some more comfort, and that's the reason we need to be careful while adding position at higher levels. Friends, that's all from my side for the day. With this, I'm ending today's morning podcast. Thank you very much for listening in, and have a great day to all of you.